Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey, Cooker here, and my top stock pick this week is Cadence Design Systems. Talked about them before. We were buyers in the spring under 125. We had a beautiful trend ride up here, and took profits near 167. The story hasn't changed. Look, I wanted to get back in during the NASDAQ correction, and 150, buying under 150 was the way to do it. I was looking for more downside from the NASDAQ correction. So we bought a couple things, but didn't move fast enough. And boy, you had to be quick. The bears got smoked on everything. So here we are, new highs. Now, why is Cadence at new highs? Well, it's this general picture of beats and raises. And you can just see, estimates just continue to trend higher. So we'll take a closer look at that in a second. Here was, they reported last week, another beat and raise quarter. They grew 14%, beat on EPS by 6.7%, and they got a backlog of 3.7 billion. Let's see what wanted to look at the guidance real quick here. Here was the guidance for 2021. Revenues are projected 2.96 to 2.98, so that's a little bump there. And they're not growing gangbusters, and the stock is a little bit rich right now. But 47 billion, looking to do 3 billion, so over 15 times sales. But let's understand why, and I'm going to make the thesis that you definitely want to be buying the dips here if we get another one. For reference, I did this bull of the day back in August that explains the company a little bit more about the company. So we talk about things like system design enablement and EDA, electronic design automation. But after I wrote this, the company actually reached out to me and said what they have given a proprietary name to what they do, and that's ISD, Intelligent System Design. So, let's to understand how this is the modern CAD CAM for chips. Computer-aided design, computer-aided manufacture, but on steroids for the chip makers to design. Let's hear from an authority who knows a lot more about it than any of us, and that's Jensen Huang from NVIDIA. He gave this talk back in June at a semiconductor conference in France called TerraTech, and actually he delivered the keynote, but he just taped an 18-minute presentation. And since it was a virtual event, but you're going to see Cadence is the only featured partner in this segment, talking about the importance of design and getting it perfect with simulation before they send it off to the fab to get built. So here's Jensen.
NVIDIA's success is partly due to what we build, but much has to do with how we build it. NVIDIA codified early on the philosophy of building our chips fully in silico and only sending to fab what we believe will be perfect. NVIDIA simulates everything and invests whatever it takes to enable that to happen. We've invested billions in our chip design infrastructure, in hardware and software to simulate our chips and systems. Simulation lets us find problems at the least costly phase of a project.
Okay, so there was Jensen explaining how they design their chips and simulate stuff to make sure that it performs exactly the way they want it to. And you saw Cadence hardware and software design systems right there in NVIDIA's workshop, if you will. So, when you talk about the semiconductor shortage, I think that a company like Cadence is benefiting from the shortage because designs need to get better. Designs that are going under sub 10 nanometers, 7 nanometer, 5 nanometer, 3 nanometer. Picture the design tools that a electronic engineer would have for semiconductors. A big screen where he or she can zoom in and point and click and put the circuits, put the transistors, millions and billions of them anywhere they want and build integrated circuits. So that's the power of the Cadence software. What else did I want to tell you? Oh, we talked about the earnings. We talked about that. Let's go to the Zacks homepage, because I also did advanced micro devices. AMD is your bull of the day. I wrote this last Friday. And just, it's like a mini NVIDIA. And I've said to buy AMD just because it trades so cheap. It's trading 8 times sales, while NVIDIA is pushing 21 times sales. My bear of the day is Twitter, and the only reason I bring that up is because what was the big news last week in social media was Facebook is now Meta. Well, what does this have to do with Cadence Design Systems? Well, Cadence Design Systems is designing the hardware and the brains of semiconductors for every industry you can think of, from mobile and the Internet of Things to autonomous driving and AR and VR, which are part of this metaverse that that a lot of companies want to create. So you can't have AR and VR without the design power of a Cadence Design Systems. All right, so that's why you want to buy the dips here. Who knows? As the U.S. tries to rebuild its internal infrastructure in the semiconductor industry, they just passed a bill, a couple months ago for $50 billion in support, and Global Foundries just went public. Our own, wafer fab, that Cadence just becomes even more important, and somebody could even fold them in at a $50 billion valuation here. All right, that's my top pick. Next up is Ben Rains with his.
Hello everyone, Ben Rains here. Today I'm looking at Salesforce, which trades in the ticker CRM. Salesforce helps start the software as a service industry that nearly every business, government, and countless other entities rely on to help them do just about everything these days. Its various divisions help support sales, marketing, commerce, customer engagement, analytics, app development, and more. The company has grown at an impressive clip since 2004 IPO, and it's posted between 25% and 30% sales growth in the last 5 years. Salesforce then posted record revenue last year to crack the $20 billion threshold for the first time. It also raised its guidance, and it's poised to thrive in the hybrid work environment. Salesforce made it a splash with a $28 billion deal to buy Slack that it completed in July to help compete against Microsoft, Zoom, and others in the evolving work communication space. Zacks estimates call for its 2022, which is its current year, revenue to climb another 24%, with FY 2023 projected to jump another 21% higher to come in at nearly $32 billion. The tech firm's adjusted earnings are projected to slip 10% this year from last year, but Wall Street has looked beyond the year-over-year decline projections to its improving earnings estimates, which help it grab a Zacks rank #1 strong buy at the moment. The stock has also crushed our EPS estimates by an average of 70% in the trailing 4 quarters, and the stock has jumped 90% in the last 2 years to roughly match its industry. More recently, Salesforce has surged 25% in the trailing 6 months to outclimb its peers, and it hit brand new highs once again on Monday morning. Despite sitting at records, Salesforce is trading at a nearly 10% discount to its own year-long highs at 9.5 times forward 12-month sales, and a 20% discount below its high water mark when it comes to forward earnings. And Wall Street is really bullish on the stock right at the moment, with 22 of the 26 brokerage recommendations that Zacks has at strong buys, with nothing below a hold. Let's also remember that its offerings aren't going out of style anytime soon, and its customers become largely dependent on its constantly adapting portfolio of business software. And that does it for today's episode of Top Stock Picks. Make sure to check out Zacks.com/promo for a look into some of our services, portfolios, and more.